investors and traders, they will check the stock market, S&P 500 and of course update of the main indexes. So let's start with the S&P 500. We see that now down more than 1%. The data released today, new economic data, the inflation data. Now of course we will speak about it. But we see that it's down more than 1%, and of course my target is here, the fifth wave. Generally speaking, it's a decreasing channel, the inflation is still elevated, and the Fed of course will continue to hiking its Fed fund rate towards the end of this year, so that's why I'm expecting another move down, and my target is about 10% lower than the current level. The Nasdaq also now, by the way, traded above 12,000, and here we can see a few levels, few support levels. The first it's 11,000, the next one is 10,8071, and also we have about 10,000 since the pre-corona level, pre-corona crisis. So here, by the way, the potential of decreasing is about 20% down, so everything is possible. So we'll check. So today released the US core Pce Price Index month to month. We see that the current price, the actual was 0.6%, the expectations was about 0.3%, and the previous was 0.4%. So the core Pce price in US, which exclude food and energy, jumped by this percent month over month in January 2022, the most since August, following and upwardly revised 0.4 increase in the previous months and above market estimates. The annual rate the Federal Reserve preferred guide to measure inflation rose by 4.7% and surpassed market expectation of 4.3%, backing signals from Fed policymakers that interest rate must be higher for longer to them in unsustainable price growth. Meanwhile, the headline figure rose by 0.6% from the previous month, the most since June, and the annual rate accelerated to 5.4%. So generally speaking, we see the inflation is continue to grow, and it's not coming down, and we don't see a relief in this area. I remind you that the Pce is inflation excluding without food and energy, but still, if we'll check it, for example, the 22 period, it was general about I think the average is 0.2%, but now the last data is very elevated, and 0.6%. It's I guess it's a lot. I have another few interesting chart for you, so let's check the Goldman Sachs expectations for S&P 500 for this year. We see the path of S&P 500 soft versus hard landing scenarios. So index may fall to 4,000 in the first quarter as rates rise, and will remain at this level by the end of this year. So generally speaking, we see if in a scenario of soft landing, it just will trading at this place, that these levels that we already trading. But if it was the soft landing, but the second scenario, it's hard landing, in this case we may see another decreasement to 3150. So it's by the way my scenario now I'm trading, my view for investment for this year. The inflation really high, the interest rate, the Fed fund may continue 5% even higher towards the end of this year, and that's why I think it's my opinion, of course my view, that we may see a hard landing. And another very important chart, so we see the M2 money supply Money has never been tighter in the US. It's by the way data for the last 70 years. So it's also another huge problem for the stock market. It's another issue. So what is M2? It's a measure of the US money stock that includes M1. By the way, it's the currency and coins held by the non-bank public, checkable deposits and travelers checks. Plus, of course, saving deposits, including money market deposit accounts, small time deposits, and shares in retail money market mutual funds. So generally, generally speaking, yeah, it's the whole money in the system, in the financial system. So now we see it's by the way it's negative. So it's the first time for the last 70 years, and I just don't see the drivers for the stock market on what and how it can grow. So for me, it's a red flag. High interest rates, M2 supply, and of course the inflation, elevated inflation is still very great problems for stock market growth. So let's come back to the indexes. So the Brent, the oil price is now traded about $81. It's a correctional wave, the fourth wave, but I'm expecting another move up in the fifth wave. It can be higher than 120, by the way. I don't know why with the reason, what will be the scenario, but now after finishing this correction, I'm expecting another move up. The DXY, the index, the dollar index, it's of course continuing to raise after the such not after such weak data, economic data, inflation data, but I'm generally expecting the DXY to see lower than 100 towards the end of this year. The VIX index volatility today, we see it's up more than 5%. Of course, the volatility is increasing. The options is the call, the put options are continue to increase since the beginning of the year. And it's another problem that if the VIX is continue to be elevated, so it's hard for the stock market to grow. And the 10-year US government bond, the treasuries, now it's very close to 4%. I guess it most probably it will be higher than 4%. The yield curve continue unfortunately to be elevated. We see that the 2-year yield is 4.8% and the 10-year is about 4. So elevated yield curve is the first and the red signal, the flag for recession. So I guess now we're in recession, or we will be in a recession in a few months. But anyway, the elevated yield curve is another huge problem for stock market growth. So generally speaking, it looks very weak for the equities, for the stock market, for the main indexes. The first quarter, the second quarter. That's why I'm continuing to buy dividend stocks like AT&T, like Philip Morris. I would like to receive cash flow in this time. I think this year may be another tough year for the stock market. So of course it's my opinion, it's my view, my analysis of the stock market. If you like this video, please press the like button, don't forget to subscribe to my channel, and see you on the next time. Bye.